Have gold and silver already made the low in price for this correction? Were my expectations wrong? Well, my friend, Professor Vince Lancy, is going to set me straight. Vince, it's great to have you back. Thanks so much for coming on. This is our monthly recap here on the Daily Gold YouTube channel. And Vince, you write the great GoldFix on Substack. You're an adjunct professor at the University of Connecticut and also with Echo Bay Futures. And you're finding the time to help us out and get a sense of this market. And we were talking beforehand, and I like to beat around the bush, but let me not do that.
Okay.
Have we seen the lows in gold and silver, the lows in price for this correction in the last couple of days?
You're asking me to answer that, right? I'm going to say, if you're putting a gun to my head, I'm going to say, yeah, we have. There you go. Broadcast over. No, I know you want to elaborate on it. I just wanted to.
Everybody can go home now. It's over.
We all go home now, right?
Well, watch a different video now.
Except,
Don't do that. Stay tuned.
no, I mean, look, I think that about 3 or 4 days ago, we established what I've called in the past a ledge. I'm not a technician, but I identified some important buy at a level that's got tested 4 times in a row. And it held. And I said, okay, this is probably Chinese insurance type of buying or sovereign buying. And I said, all right, so now we're going to be in a new range. And the new range for me was, let me see if I can find it. The new range for me was essentially 39.20, but then it held 39.20. And when it bounced off of there, like the 4th time, I said, okay, we're in a new range. So we'll range from 39.20 to like a high of say 40.20 or 40.30, a little bit of a channel. And yesterday is what happened. Yesterday, it just ignored that level of 40.25, 40.30 that I had and just exploded through it. So my conclusion is that number one, I was wrong about the channel, but I was right about the low. So I think we have a low that's in and we have a new channel that's being established, very similar to the big range that we started to get back in April after the April run up. So I think we might be having another run up pause.
And there's also the element of time in these corrections. People cannot forget about, because you go back to the spring and I believe the low in price was made pretty quickly. And so it's not out of the realm of possibility or even probability that yes, we have made the low, because historically, Vince, in these corrections, gold and silver in a bull market, when they're just having a correction, you can make 90 or 95% of the damage in price very quickly.
Right. But that's not something I think a lot of the people who are gold and silver people really remember, because we haven't really been in one of those markets in a while where you get that V-shaped correction and then it just flatlines for a while. We're used to getting the correction that retested 2 or 3 times before bottoming. But yeah, you're right. I think we're getting these V-shaped bottoms and then sideways ranges, which is what we had in the spring, as you described, right? Frothy, puked, V-shaped bottom, even on a weekly it looked like that. And then the market just went sideways for 4 months. And we just had 2 months of a rip rally. So maybe we should be going sideways again for 4 months. We could drop too, but I don't think we will.
And so maybe you've already answered this, but just for my own edification, I was expecting a rebound, but certainly nothing like we saw. And so, at least from the standpoint of someone who's too cautious, which is always me, I admit that. What does that mean? We're in a correction, but we get a much stronger rebound. Like for the players like me, you were too
Right.
cautious. I mean, what is there anything new aside from what you've already said that means that we're having a much stronger rebound? Because that just wasn't like, oh, it's having a good day. I mean, those were strong white candles, big gains, close at the highs of the day.
Right. Right. Let me just address the last thing you said first before I get into the whole bigger picture of it. Yesterday's action was so amazing because there was no reason for it. And by that, I mean, we came out of the weekend with the news being that it looks like we're going to have an end to the shutdown. and that's bullish for stocks. And usually it could be bullish or bearish for the dollar, but it should be bearish for bonds. And so bonds were weaker, going down. I'm like, all right, should be bullish for stocks. Stocks are up. Then we got to gold, and I'm like, wait a minute, why is gold up? It's only up $3 or $4 very early in the night. I'm like, all right, it's at $3, $4. Okay, let's see how much they knock it down. And no one sold it. And so China bought it. And then Europe bought it when they opened up at 4, but then at 8 a.m. Eastern time US, they sold it again, but only for 2 hours. It was like an hour of selling. And then the market just kept going up. So we were bought in 3 different time zones yesterday. And there was no reason for it except that somebody got impatient. Now, I think I know who got impatient. And this answers your question as to who's buying and who's not. To put a timeline on it, the ramp up, the biggest part of the ramp up before Trump and Xi met, which was in October 16th, I think it was. I'm not really sure. Give me a second here. Yeah, Trump and Xi started meeting between October 16th and October 20th. That's when you started seeing trickles of information coming out. Now, if you look at the chart, if anyone brings up a chart when it's time, the market had a very steep but orderly rally between starting in I'll call it the first week of September, all the way through October 13th. And then on October 13th, the market just went ballistic. And between the 13th and the 16th, it just ramped higher at a much steeper rate. And between the 16th and 20th, very volatile, but stopped. And then it came off. Now, the reason I bring that up is because I believe, this is a little bit of a story, but it's not a tinfoil comment. I know that when China's negotiating with someone, they will use markets to make their point. They're very careful to not do it in the FX market, but they'll do it in other markets. And I'm 99% sure that macro discretionary was buying September 1st. It's August 26th. And they were running the market up because the American ETF buying was coming out. And you may remember at the time, we had a lot of reports coming out saying gold's going to go to 5,900, gold's going to go to 6,500 by Jeffries and a couple other places. I think even JP Morgan came out ridiculously bullish. And during that time, the market was ramping up as macro discretionary was buying, and then during Asian hours, and American ETFs were buying during American hours. And then we get to October 13th, and the market explodes, and it explodes from Chinese buying. And I feel like Xi was, or China in general, was making a point. And the point to the US was, hey, we're going to go into this negotiation, and we're going to go into this negotiation with gold strong, so you can see that we're part of the game. And I think on the 16th or so, the US said, no, whatever you do is fine, but it won't be on the highs. And so we knocked it down. And if you look at what happened, the negotiation ended around October 19th, October 20th, and gold just dove after that. The reason I'm bringing all this up is because that buying pattern, I've seen it before. I saw it in December of 23. I saw it in April of 24. It's like a year anniversary. And I saw it in April of 25. And now I see it in September in the ramp up to the event. And when you ask who's buying now, right now, that is probably macro discretionary who sold. They sold it near the top. They were selling it to ETFs, to mom and pop retail, and to the FOMO crowd, the CTAs that are just like saying, we think it's going to infinity. And I think they're buying down here again, as well as a couple bullion banks that are very smart. So I believe behaviorally, the players are lining up with the chart, meaning in April of 25 this year, macro discretionary buy it. And then Liberation Day came. And then after Liberation Day, it dove. And then it had that V-shaped bottom you're describing that it's flatlined for 4 months. Well, we had a run up in September. It spiked, it dove, and now it's flatlining again. And I see the same buyers back. I see macro discretionary buying the dip. I see CTA selling into the lows. Silver is a great example of that. The silver ETF, just to let you know that it's there, the silver ETF has gone in backwardation, meaning there's still physical tightness. But the funds have been selling for after October 20th, they started selling very heavily. And now they're done. And now the ETF is saying physical demand is really what's driving the market. So to your question, the players are lining up like they did before. It's almost eerily perfect. But it's actually worse in the sense that in April 25, there was a problem at the LBMA. And now in September, there's a worse problem, referring to silver, of course. But the players are doing what they did last time, lining up with the charts that you're seeing as well. So I think it's really reasonable to think, because of the chart, because of the way you look at charts, and because of the way I see the players lining up, that we have put it in a low for gold. And I'll hedge myself by saying this. If we haven't put in a low for gold at, let's say, 39.8, I'm looking at spot 39.88.
I think it was like 38.85 or something, or 38.9, just below 30. That was the intraday low, I believe.
Yeah, exactly. It was a long wick low on a daily. Well, since we made that low, which is the low that you're referring to, the market tried to retest it over 4 days. The next day, the 29th, the 30th, it made a low at around 39.27. And then it came back and tested it on the November 4th, 39.27. And then on November 5th, it opened at 39.27, and it's going up. So the market, I think, is back in bull mode. Or put it this way, it's either in bull mode or it's in bigger trading range mode again, tapping us at, let's say, maybe today's high is a gap for a while, 41, 41, 45 or something like that. So I guess what I'm saying is, I think I would be, if I had the opportunity, right, I would be a buyer between 39.35 and 39.25. And I wouldn't even consider selling until it got below 38.85. You follow that long wick that you described? That's where I'd be. And I'd say that because that's where I saw the buying last time. That's where I saw the big boys buying last time.
But as far as it making a new low, it could come down below that, but I don't think by a big amount if that happens. I mean, you've seen that in your day many times, right? Where it comes below a level, and the inexperienced trader, holy shit, we got a short, and then.
But I'm going to disagree with you, because I'm going to tell you how I'm going to feel if it gets there. If it gets to 39.30, I'll be like, great, time to start buying. If it gets to 39.80, 38.88, 38.8, below that, I'm going to say, oh crap, I need to see that buying again. If it gets below there, yeah, I don't have a lack of faith in the bull market. What I have a lack of faith is in holding on to positions short term. So if it gets down there again, I'm one of those people you hate. I'm like, should I get short? You know what I mean? So I become the enemy. I mean, I'm not going to say I'm going to get short, but I'm going to say that I'm not going to buy, and I'm going to be crying a little bit. I might puke my lungs. So I don't want us to get below 39.30. And if we do, it's got to hold 38.88 for me to be very sanguine about us being still in a range. That's it. That's where I am.
Well, I will respectfully disagree and say it doesn't bother me if it goes a little bit below,
of course,
the recent low.
I mean,
but that's what makes a market.
Right. Exactly. Look, between here and 39.30, you and I are buyers. Between 39.30 and 38.88, I'm still a buyer. Below 38.88, I'm at the bar drinking or getting out of my longs. And you were like, I don't care. So that's the difference in temperament. Now I'm buyer physical down there, but I would be long futures up here, and I don't want to be long futures down there.
And a follow-up question based on what we're talking about here. And I don't think I've asked this to you before, but can you explain, I can think of an answer, but can you explain why the market needs time? It actually has to consolidate and go back and forth before it makes another big sustainable move higher, because there are listeners to all the podcasts that you do and the videos that I do, and some of them may think, oh, well, the market can just a little correction and it'll just blast higher again, which in some aspects that can happen.
Yeah.
But can you give, from the standpoint of a futures trader and how you manage risk, like why the market sometimes needs time, whereas just can rest and it goes back and forth?
Well, if I think part of it is my religious bias towards the market right now. To give you a background, I could put a real time frame on this for you to give you an idea how I traded this. When the market broke out late in August, I got a buy signal, like one of my systems buy signals, and it was the cleanest, the best signal I've ever gotten in gold. And it was weekly. I rarely get them on weekly that don't at least hesitate a little bit. And it was a weekly signal. And I actually told subscribers what I did. And I think some of them actually, I didn't tell them what to do, but I think some of them actually did it. And the reason I'm bringing this up now, it's not a bragging point. It's like I was witnessing, is because my system says between 3 and 5 weeks, 3 and 5 candles, between 3 and 5 weeks, it runs out of gas. And so between 3 and 5 weeks, I started taking profits in the rally. And I started saying to myself, this is getting crazy. It's not healthy if it keeps going up. I was wrong. It was healthy. But the concept that I was talking about is very valid in the sense that if it gets ahead of itself, you get too much hot money in, and that hot money can be the undoing of the market because they get, look, if you have 500 investors buy gold at 3,900, and then you've got 200 investors that buy it at 4,100, then you've got 25 investors that buy it at 4,500. The 25 investors are the problem because they're traders, they're short-term oriented, they're FOMO, and they will make the market drop because they'll get out. They'll be their own undoing. And you want to make sure that it doesn't get through those mid-level guys, right? You don't want to have it go all the way back to that level. And I think in my long-winded way of saying that anything that gets over its skis is going to wipe out. And so a little bit over its skis and then having these people get out, let the market cool off is fine. It's the same principle that you look at technically. It's MACD, it's RSI. The market needs to cool off. I'm not going to say anything that you or your listeners don't know, but I think this was, put it this way, we've had 3 healthy corrections in gold in the last 2 years. I'm not used to that. I'm used to, oh boy, we're done, like lumber or coffee. And that's what people I think forget. Like I'll say, oh, this is going to be like coffee. Coffee will have an exponential move and then just go to zero. Well, that's because it's a crop. Gold's not a crop. If gold's going up, it's not because there's a shortage of it. It's not because there's a bug that's eating all the gold, like in coffee, or there's blight, because they want the gold. And you don't buy gold, for a season. You buy it for a generation. And so I think this is very healthy to shake out the weak longs or the paper hands or lettuce hands or whatever we call them now. So yeah, I mean, I made too much of it, but yeah, that's the answer.
Lettuce hands. I like that. But to wrap it up on gold, I'm taking away what you said earlier, and that's just eerily similar to the spring, the players
Yeah.
and the construction of the market at the beginning of that consolidation. And so this is potentially, it would be a very bullish consolidation. The fact
Yeah.
that we're saying 3890 or 3900, that it more or less is going to be the low end price for this correction.
Yeah.
If gold goes sideways for 4 or 5 months, that's super bullish, people. That's not bearish.
It is. It is. When we were in the middle of that rally from August to October, I was saying to myself, wow, we're really going. And I was scaling out, but I kept staying a little bit long. And I said to myself, well, this is really steep. And I went, this has been going on for 7 weeks. I'm like bumping up against my 8-week area. I'm sorry, my 5-week area. And I go, this is really steep. And then I said, wait a minute. We went sideways for 4 months. We're getting what we should get. And so an 8-week rally, now I'm looking at it going, well, geez, I hope we go sideways for 2 weeks, or maybe it'll be 2 months. But the point is, gold and silver gold's a real market. Silver's becoming a real market. And by that, I mean dynamic with pullbacks that are healthy, as opposed to every pullback makes people suicidal. Yeah. A sideways market is bullish now. That's something you don't say in precious metals going back for years. Sideways markets are bearish in precious metals because people lose patience because something else is moving. If I'm a fund owner and I have money in gold, sideways is bearish because something else is moving. And I take my money out and I put it in video, or historically it would be oil. Oh, oil's moving. Let's trade oil. And that's the thing. But now gold is moving and it's resilient. And so people are taking their money out of things and putting it into gold because it's moving. Look at oil's like dead in the water compared to gold. So I'm with you. It's a real market. We have real markets now, Jordan.
Do you want to get into silver next? Or is there a chart or two that we should discuss first?
I do want to get into silver, but I want to mention something that's not technical, like completely like off the, that's one of the reasons for me to be comfortable from a structural point of view. And China's Shanghai Futures Exchange. They have an incredibly increasing warrants issued for physical gold there. So it's exploded by 25 times it's increased by 2,500 percentage wise in the last 6 months. And that's a reflection of gold in China being made unavailable for anyone else to use. It's spoken for. It's done. You can't pull it out of there. Now, this started to happen in April. So it started to go up as we started to do the tariffs. And I think China is accumulating this gold, or let's put it, earmarking this gold for another purpose. And that other purpose that I've gone on and talked about before, and I did like a paper on it, semi-academic paper on it, saying that I think China is doing the next step for the BRICS. The BRICS are saying, we're not just de-dollarizing, we're going to use the gold to finance projects. So there's something called a repo market. And the repo market basically is, I can take an asset like to a pawn shop, and it's almost always treasuries, and you repo it or you repurchase it. So basically a sale repurchase. And you give it to your creditor, he holds it as collateral, and he gives you a loan in cash, and then you build your bridge, or you build your factory, or you use the money to do something. You can't do that with gold. Gold's a store of value, but it is still a pet rock. You can't use it as collateral to finance. The global markets won't take it. China's in the process of setting that up, I believe. And someone else who I value his opinion, Eric Young, King Kong, he believes it as well for different reasons. And we've had a meeting of minds on this. And the reason I think this is significant is because the buying ramping up to the summit with Xi and Trump, it didn't resolve anything. Things are worse. And China has accumulated even more gold in their vault or in their warrants. And so I would say to you that we could have an announcement within the next 6 to 9 months where China starts to take gold as collateral from other countries and use it as a financing tool, which would put us on a slope of, I'm not kidding you, $10,000. I'm not predicting that, but it would, because you're going to be printing money to guarantee gold and you're going to be spending it. It's insane, but I think that's a path we're on. Whether we get to that price or not, I don't know. But the path is treasuries now have a new competitor, and that's gold. And this has been going on for years since you and I started doing this. And it's been getting, do this, they did that. China says we're going to do this. 6 months later, they do it. They say it, they do it. And now they're like, we're buying the gold to use it, not just to sit in a vault. And I think they're doing it. That's why they have all these vaults they're setting up. So I think it's a segue into silver as well, because silver has a similar thing going on, even though silver's not being bought for collateral at the BRICS level. LBMA is running out of silver. And we know that story's out there now in our little community. And LBMA was recently bailed out. When silver made its high, it was the same time that Trump and Xi were meeting. And when silver came off its high, that was the CTAs panicking and selling again because the LBMA got bailed out. The LBMA's bailout was metal coming from the US in planes going to London, and metal being leased from China to London. Now, since London has leased all this metal to satisfy their demand, China has started emptying their vaults. They're just emptying their silver vault. So instead of putting a warrant on it, they're just emptying it. it's not going to be available. So silver, for a related but different reason, is also put in its low, in my opinion, because the physical problem has not abated. And so I think we're going up. You want to do silver now?
Sure.
Oh, wait, no. We need to look at you had a chart that we were looking at, the 60/40 portfolio with
Oh,
silver.
silver against the 60/40.
Let me see if I can bring that up. All right. I have a marker handy if you want to talk about it.
If you just look where the blue arrow is. So in the last couple months, silver against the 60/40 broke out of a 11-year-long base. You can see that going back to 2014. And
Right.
so if you look in the last month or two, you had this huge move higher up to 3.2, and then you can see 2.7. That's the breakout point, or 265. And
Right.
so after that huge move like that, then the question is, how much lower is the ratio going to go? Where's it going to bottom and stabilize? Is this going to fall back below the blue line there? And then you kind of have a false breakout? Well,
Right.
look what's happened in the last 2 weeks. That's a really strong rebound there, right at the blue arrow. So you have to look at that and think, this looks like the ratio is going to hold above 2.65. And
You're
so,
referring to where the blue arrow now is really the support that the red arrows used to be resistance. Is that what you're saying?
yes, yes. And so the key is, we had a very strong move higher at the end of summer into fall,
Right.
right
That's
there. And
here.
you can see, and then the question was, is this going to come all the way back down and give up those gains, fall back
Oh,
below the resistance? But in the last couple of weeks, the market is saying, "Mm, I don't think so.
right.
It's
Right.
going
Right.
to
Right.
hold above, it's going to hold above that resistance."
Right.
And so the longer that holds above it, that's really bullish.
Right.
And
Right. So basically, I mean, just putting it in non-technical terms, for me, the market runs up steeply, like you say, and gets above here. Now you're not looking at this level yet. You're just saying it's coming back down. It's coming back down. Oh no, we're going to go all the way back to the blue line, and it stops here and reverses like a V. And so now these tops are a base. Is that
yes,
what is
and I
that?
would, yes, no, you're exactly right. And so I would say, in the other scenario where if it would have fallen back below the resistance in that area, if it falls back below, then you're for silver breaking 50, that's going to take months and months.
Right, right, right,
It's not going to happen in a couple months. But the fact that early returns are very strong, that we're holding above that point, that's saying that, okay, the market is that much closer to making that big breakout above 50, because for the market to break above 50 and make that move to 100, which I think it will do eventually. Michael Oliver's been talking about it forever. Credit to him. Silver needs to be outperforming in real terms. And that's what this chart is. Silver against the 64, silver against the
right,
conventional
right.
portfolio, silver
No, I
against
remember.
stocks and
Wait,
bonds.
I'm going to interrupt you because
Sure.
when you were talking about silver to 60/40 in the beginning, we were crying in our soup because it would never break these 60/40 lines that you had. Gold had to be first, right? Gold broke it. And you would say to me, you would say, it broke it, but it didn't break it because gold outperformed. It broke it because the stocks went down. And so because of that, I'm not that bullish yet. But when it broke it because gold outperformed from rallying as opposed to going sideways, you got happy. And then your focus turned to silver. The same thing happened. And you said, look, yeah, we could go up. It's going sideways through a channel. I don't care if the market, I don't care if we do better relative to 60/40 because silver's going sideways. I need silver to actually out rally NVIDIA in a rally. And that's what we have now. Yeah, I think you're right.
Yeah. And so as long as we continue to hold above that blue line there around 2.65 and that arrow,
Right.
doesn't matter if it does that for 3 months, 6 months, 4.5 months, whatever. That's just telling us it's revving its engine. It's getting ready for that explosive move where it goes above 50 and then it doesn't look back.
Right. your formation is like the rounding bottom. It's not a cup and handle, but the same idea of you have a rounding bottom and then you have a test and a pullback that lasts a long time. And within that, you get another rounding bottom. It's like a saucer and a handle or a spout. I don't know, but it looks great. It looks good.
And if you go back to the lower blue line, which I think, what is it, 2.20, if you go back to that resistance, when the market broke above in the middle of this year, not even that long ago, that was facilitating silver breaking above 37.41 and being able to run to 50.
You mean in here?
Yeah, I probably should include the chart of silver, but yes, when it was able to break above that, I mean, it did it kind of roughly. It wasn't a clean breakout,
Right.
but that basically set silver on its course to breaking above 37.41 and then getting to 50. And so the fact that silver is now, it's holding its breakout. It's holding above 2.65.
Right.
That's signaling that, okay, now there's no overhead resistance here. Well, you could go back to 2013. I mean, you go back to that area, but it's
Right.
still, you're breaking out of an 11-year long base.
Right.
It's in a much better, much stronger position now because it's holding the breakout.
Right. Look at this. So here you have, like, I'm just looking, pretending this is just silver. I know it's not. This is like your typical silver. Makes a spike, fails, makes a spike, fails, makes a spike, fails. And now you have, makes a higher spike here and ranges because it doesn't make a lower, on all these, they make lower lows, right? High, low, higher high in a short time period, higher low. And now you've got three, like there are three peaks are right here. And we're above all three of these spikes. These aren't spikes. These are warnings. You know what I mean? They used to be spike highs that you get out. Now they're warnings of a bigger problem. I like this.
I think that's our only silver chart. Is there anything else we have to mention with silver?
Timeline. Should I bring that up?
We're moving on to the stocks.
Oh, yeah, that's right.
Okay, so this is the GDX advanced decline line, and this is as of yesterday. So this is at the end of Monday. And even before Monday's upside explosion, you did have a positive divergence. You could see where you had the lower lows in GDX, but the advanced decline line, you had the lows holding.
Are you referring back here?
Or just the last month or two, that the low around 2,500 in the advanced decline line.
You mean where you have it marked off in blue?
Yeah, the sideways. Yeah, you can see the sideways. Well, for GDX, yes, that line is down, but you can see at the top there, it's sideways. It's lateral. And
Right.
so I mentioned that in my Friday recap last Friday. I mentioned it in premium update because, again, me liking to be conservative, this was just throwing cold water all over that.
Right.
And then, as I said yesterday, or Monday, we got an explosion to the upside. It's so the advanced decline line, it made a higher high.
Right.
And Vince, look where GDX is. It's like at 76. The high's at 85. It's not even close.
Right. 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 Right.
Now,
So wait, this is the GDX AD, right?
Yes.
Right. And this is GDX, right? And so basically GDX AD never made a new low, even as the market was. So we used to call these non-confirmations. What do you call it? Divergences, right?
No, you're right. It is a negative divergence.
And now you say,
it's same thing, non-confirmation.
this is why you were crazy yesterday or today, or when I saw your post. You've got GDX coming off its lows, GDXD coming off its lows, and the market is nowhere near overbought in price. And this is saying, this is like a momentum sign, isn't it? The AD?
Well, you could say so because the AD line, it's a cumulative participation of all the mining stocks, basically. So
It's
every
like
day,
breadth, right?
breadth, yes. How many are rising? How many are falling? And so
Right.
what that tells us during the correction is that most of the stocks were actually holding up very well. There are probably a few that were getting hit. I think Newmont got hit. I mean, I don't follow Newmont that closely, but I think there were a few like Newmont that got hit kind of hard, and that was
Right.
dragging down the index versus
Right.
most of the stocks were actually holding up really well. And that's what you want. And it's like, to use a sports analogy, like your football team is the strongest when your offense is good, your defense is good, your special teams is good versus like,
Right.
oh, we have a really good offense that's just carrying everything.
Right. Right.
Because
Right.
when everything is good across the board, that market is that much stronger.
Right.
And
Right. So the buying was sticky. I get it. I get it.
just one more thing. When you have a divergent, when you make a new high or a new low,
Right.
that is when the signal is its strongest. So
Oh,
Friday, we had a good signal because we had a lower low in GDX, the advanced decline that hadn't broken down. But what happened on Monday? That's a much stronger signal when the market makes, or the advanced decline line makes, a new high ahead of the market itself,
so
GDX, which again,
that's a sign of more broadening breadth. That's a broadening market, right?
yes, yeah, and I think
So,
you made this point 2 or 3 months back when we were talking about the same thing. I think maybe if you go back to June or
yeah.
July, you can see there was a positive divergence. It made a
Yeah.
new high, and then the market exploded after that. And you made the point that, I'm sorry, I don't quite remember, but it had to do with the banks and their clients
Oh,
and
yeah, I know what
what.
happened. I know what happened. The first time I got into miners, like in a long time, was like 24. And I just bought GDX and I bought Newmont. And during that time frame, the other miners didn't do anything. And I got lucky and Newmont did well. Druckenmiller had bought it as well. I bought because of Druckenmiller. Let's be clear about that. And then what you would get is you would get an advanced decline terms, you get this. The advanced decline would make a high and then it would come off. And it would come off because when Newmont did sell off, all the other miners sold off worse. Like they all were just tracking Newmont. And now, to the point in here is during this time frame, Citibank, Bank of America, and RBC started saying, we like all the miners. And the rallies started to broaden. Like you'd say, like you'd start to listen to your buddies, like, hey, I'd say, how are miners doing today? And it's when Newmont would be up. And they'd say, oh, not really that good. Then it's like, how are miners today? Newmont's up 50 basis points. Oh, miner up 5%. I'm like, what? And so it started, that's the broadening of it. I started to see that in here. I didn't know what to make of it. But yes, we had talked about this, I think the banks have been, look, I think the banks have been short miners for years and taking the profits from the shorts and buying tech stocks. And I think when the miners started to look good to them as an alternative to tech stocks, they started to cover their shorts and then they put out buy recommendations. And that's why we are where we are here, where you have a market where it used to be if Newmont sold off, everything sold off. Now, if Newmont sells off, nothing else sells off. It's very good. It's very constructive for the industry. So yeah,
It's to confirm or put a button on it, this would signal that there's still a lot more big money that has to come into the market. The fact that you're seeing this broadening during a period, well, I shouldn't say during, but you're seeing this broadening when GDX is so far behind.
right. You're seeing, right, exactly. So let's say, so there's two of us out there, right? There's me and I'm long my Newmont, and there's my buddy who's long a junior miner. And I'd be like, oh, miners, man. Newmont was down 1% today. How'd your guy do? It's like, yeah, mine was down like 0.5%. I'm like, why? Like, I'm supposed to be the big one. I have a feeling that up here, and I say this for the right reasons, I say that up here, people like me, like that are big miner owners, like, not, I mean, that own big miners, not big miner owners. You're a big miner owner. Like me are saying, Newmont's run its course. It's time to look for something better. I think this ADX move here is a manifestation of it, a broadening of the market. I want to add something that has nothing to do with miners, but the word broadening is starting to come out a little bit more. So I'll tell you what I mean. The World Gold Council's report, which I don't really pay close attention to them too often, but this month's gold trends one came out and they said, it was like almost in bold letters for me, the way I saw it. Central bank buy is still there. It's still buying. It's seasonally going up and it's broadening. That's the word they used, meaning banks that had been dormant are now buying it. Like Jamaica bought, Brazil bought, first time they've been buying it in 5 years. And when you look at it that way, compared to a GDX advanced decline, it's the same thing. Your quote, second tier miners are in the game now. Your second tier central banks are in the game. And like you said, this is happening with gold, not on its highs, but near its highs. So this is a market that's getting recommitted to. I agree.
Okay, Vince, I want you to bring up another chart because maybe this might be premature to say, but maybe let's look at an area where there's a lot of money. And if it craps out, that could also be coming into gold and miners. Do you know what I'm talking about?
You talking about the one that I showed you about Bitcoin and gold?
Yes.
Yeah, yeah. I'm a Bitcoin guy. Yeah, so here it is, Jordan. I look at gold and Bitcoin, and I rarely look at them as related to each other because I look at Bitcoin as risk on gold and gold as risk off gold. But someone pointed out to me that the Bitcoin gold relationship is best expressed as a division. So Bitcoin divided by gold. And this person said to me, not looking at these other things, this person said to me that he likes to see it in this area here. Now, that chart goes back to 23, and there's plenty of movement going back there. But here, I want to show this to you because I think people will appreciate this. For me, as a non-technician, this area here, this part, I don't care about that. I don't care about it, right? But this is where we got the whole new ETF thing. And this is where I view it as Bitcoin and gold actually have a relationship. It's not risk in terms of relationship, one's on and one's off. It's a relationship in terms of where people put their money. Normies buy Bitcoin ETFs now, and they've been told to buy it instead of gold. And they're now buying it with gold for different reasons. And so this whole time frame here, for me, has made it very valid to look at the gold Bitcoin relationship. And I was just drawing the line in here saying, okay, that's the average. It goes up, it goes down, it goes up. And then after looking at it for a while, I said, oh, look, that's kind of like a head and shoulders, isn't it? And then you told me to put a moving average up. So you should take it from here. Tell everyone the moving
That's the
average.
equivalent to the 200-day moving average here on the weekly chart. Technical analysis tip for the people at home. I love moving averages, but for moving averages, focus on the slope of the moving average. Is it sloping higher? Is it sloping lower? Is it sloping sideways? By the way, sideways long-term moving averages, that's a headache. You don't want to be in those markets. But we can see here, look at the slope of the moving average. In 2024, early 2025, it's still sloping higher, even though the market went below it, as you can see right there in last summer. Same
Right.
thing earlier this year, this spring, March and May. It went below it, but the moving average was still, it was kind of flattening, but it started moving higher after that.
Right.
Now the market has fallen below the moving average significantly, and the moving average is sloping down now. People, that's bad. That's not good.
That's a headwind for this market to get. I mean, maybe it'll retrace up to the moving average, but there are too many people looking at this going, I got to get out now.
Right.
You're
And
right.
just one last thing, Vince, and you mentioned this, I believe, in our pre-show. And if you go back, what is that, about 6 weeks or so, you can see there's a green candle that rallied back up to the moving average, up to
Oh, yeah,
32
yeah.
there. If
Let
you
me
go
zoom in on
back
that.
to,
Yeah, we
yeah,
were
so we're
talking.
looking at 1, 2, 3, 4, 5. So it's about 6 or 7 weeks. And you can see the moving average. So this is September. You can see the green
Right.
candle.
So we cracked. The slope wasn't that steep. And this is the one you're talking about right here, right?
Yes, and after we cracked, you could see the market. It was below it, but it was just hanging around. Then the bulls said, "All right, we're going to rally here. We're going to try and take this thing back." And it was a really good week. But then the next week, you had a bearish where it's like, "Holy shit. Okay, this market is in trouble now." And
Right.
what has happened since that huge sell-off? You had another big sell-off, then a rally. Now the market's rolling
Yeah.
over again.
See this pattern
this,
here? I'm sorry, I didn't mean to interrupt you.
no, go ahead.
This pattern here, I'm smiling because I'm like, that's a gold pattern. That's an old gold pattern, meaning it gets ahead of itself, it comes off, the bulls try one more time, they throw in the towel, you get a bearish engulfing, and then this is proprietary. It's not me, it's from a guy named Jeff Stevens, an old school metals trader. You know the dead cat bounce? He had a better name for it. His name was the marble drop. And the marble drop goes like this. The market drops, bounces right here, and then drops again right away. And he says, that's a marble drop. Drop a marble off the table. It has a little tiny bounce, flat lines, and then falls off,
And then just
falls off the edge of the table.
Yeah.
So this is, by the way, this is what gold used to do all the time. It would drop, bounce, flat line, and then one day do that. So maybe this is head and shoulders.
Yeah, and I don't know if this pertains to this entire structure going back a couple of years, but you probably seen it on Twitter. People talking about the puking camel.
Oh yeah, that was actually something they used to describe gold.
Yeah, the puking camel. So yeah, I don't have that handy, but that you were talking about. What is the marble expression again? Before I forget.
The marble drop, right?
The marble
the
drop,
marble
yeah.
drop is you drop a marble on a table, it bounces once, and then it rolls a little bit, and then it just falls off and hits the floor. Yeah, that's the marble drop. But the puking camel, well, this is 3 humps. Maybe the puking camel is like, it's funny. They call it the vomiting camel. It goes back to someone, it might have been CNBC or Bloomberg, and gold had sold off its highs, like puked, like, and it's classic gold, right? And the person on the show made it up. Oh, well, that's the classic vomiting camel.
Yeah.
Here's the first hump. Here's the second hump. And there's the camel. I mean, you can pull that up somewhere. That's about there. But yeah, that used to be the puking camel was a chart invented to describe gold. Maybe it's in play here. Who knows?
And I don't know if we need to, this is a leverage play on Bitcoin, but MicroStrategy, do you want to bring, I mean, what does that tell you that, okay, Bitcoin looks like ass, but then my MicroStrategy looks even worse?
Right. The moving average hasn't gone deep yet, but MicroStrategy did its own thing. In fact, I mean, it makes sense, right? It's a proxy for Bitcoin. MicroStrategy retested it, actually got above it. Bitcoin didn't get above it, got above it and failed.
And you can see now sorry to interrupt, the last 5 weeks, you don't even have an up week. It's just all red candles.
Right. At least Bitcoin did this.
Yeah.
Right. This is just going down.
I mean, you're a trader, so obviously it makes sense. If Bitcoin's going to crap out, the leverage plays are going to just absolutely fall through the floor. But from a trader standpoint, is that partially because traders, they get in there and they say, okay, well, I'm going to short this because this could go to zero, basically.
Yeah, absolutely. It gets piled on. I mean, that's a macro discretionary thing. Like you look at what'd you say, the 40-week moving average? Is that your,
yeah,
right?
Well, the 42-week is about the equivalent to the 200-day.
You have a really big one. Well, that's macro discretionary. Like macro discretionary will say, I don't care about the 200-day moving average. I care about the 400-day moving average. Or I will look at the 12-month moving average. So 365-day moving average. And what they'll say is, this is what we talked about when they got interested in gold again. I don't care about gold until it's above the 12-month moving average. It's not a technical reason for them. They're like, I literally need to know that it's absolutely above its moving average for the past 12 months to feel like it's going anywhere. And so it gets above it, right? But the moving average is going sideways. And they say, okay, it's above it and the moving average is sideways. If the moving average ticks up, buy it. And these guys right now are looking at moving averages like this going, the macro discretionary boys aren't even selling it yet. Like they're like, oh, it crossed through the moving average. That's bearish. That makes longs get out. Longs get out. And now you have another long who gets out here. This isn't shorts getting in. That's trapped longs getting out at the moving average. That's me going, I'm long MicroStrategy. It's come off. I'll wait for it to back test and then I'll sell it there. And it doesn't back test or it doesn't stay there long enough and the market comes off. Now, if this slope drops, you're going to have bigger boys get in now. It's kind of crazy.
I can't recall. Do you have another chart
No,
or
I'm done with my charts.
okay. Well,
I'm done
I
with
mean,
these
we
charts.
yeah, I think we are almost an hour into this. So,
Yeah, we're done.
is there anything else we need to mention here other than, I mean, if I'm wrapping it up, it appears that the we've made the lows in price for this correction for metals and probably miners too.
Wow. Yeah, it does. It does. You know what? I mean, just to come back to Bitcoin right now, you know, the problem with Bitcoin, and I'm talking as a person who owns it, when it starts going down with stocks going down, I don't care. I'm like, that's the hot money getting out. But now, if you look on the right hand, you can't see it on my screen right now, but stocks are up today. They've fought back and gotten up, and Bitcoin is dead in the water. And that's dangerous. That's a Bitcoin problem, not an American investor puking problem. Anyway, yeah, it's something to worry about.
Yeah, I do have another comment on that, but I'm going to save that for when we're off the air.
Okay.
But okay, before I let you go, Vince, please tell all our listeners. First of all, listeners, thank you so much for making it all the way to the end. We appreciate you. Vince, please tell our listeners how they can subscribe to GoldFix, where they go, how they can subscribe.
You can look for me. I'm on Substack. It's VBL Victor Boy Larry GoldFix Substack, and that's a metals, geopolitics, and money newsletter. We frequently post, and we do semi-frequently email, but I do a morning rundown video, and you're welcome to join. Obviously, after you've signed up for Jordan's Daily Gold, but we'd love to have you, and that's it. You can find me there.
And people, if you really want to know what's going on in this market, you need to subscribe to GoldFix. You're getting multiple updates every morning during the middle of the day. If you want to become an expert on what's going on, who's buying, who's selling, the big players in this market, what they're thinking, nobody covers it like Vince.
Thank you. And then go to Jordan for the charts. Don't get those from me. I don't know what the hell I'm doing.
Well, you send me charts. Your charts are pretty good. I mean, I steal a few from time to time. But Vince, thanks so much for doing this middle of November. So, hey, we can do our December recap maybe in 3 weeks or so.
We'll just make sure this one's deleted if gold's lower. All right?
Absolutely.
Right.
Well, if I don't talk to you until then, hope you have a great Thanksgiving. And to all the listeners, we'll see you for the monthly recap after Thanksgiving. And thanks so much for tuning in. We'll talk to you next time.
Thank you.
Thank you for tuning in to the Daily Gold podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.